know I'm always talking about the American energy renaissance. Wholesale revolution in oil and gas production made possible by hydraulic fracturing, or fracking for short, and horizontal drilling. This is where oil companies pump tons and tons of water deep underground, use it to create cracks in the rock, releasing oil and natural gas that was previously thought to be too difficult or expensive to recover. Now, I've given you a ton of ways to play this: EOG, Pioneer, all sorts of drillers, but tonight I want to take you in a different direction. I'd like to introduce you to a company that helps make hydraulic fracturing possible: Emerge Energy Services, EMES, master limited partnership that supports a 4.3% yield. Emerge makes sand, specifically northern white silica sand, the kind that's used as propellant for hydraulic fracturing. When drillers blast open cracks deep down in the Earth's crust with a gigantic kind of a fire hose, they need materials that will hold those cracks open while also letting the oil and gas out. As it happens, the right kind of sand does the job. That's how a company like Emerge Energy can see its stock soar from 17, where it came public in May of last year, to nearly 106 today. 530% gain a little over a year. You're going to get that in bonds. You have to understand, with the huge boom in fracking, there's tremendous demand for this company's high-quality sand. Emerge has 3 plants making this stuff, backed by several mines with high-quality reserves. Meanwhile, they're increasing lower-cost capacity, boosting production. The company also has its own fleet of railroad cars to transport the stuff. Oh, and the company also has a fuel business where they sell wholesale petroleum products, renewable fuels like biodiesel. But it's the sand part that gets all the attention. Sure, the stock's had a huge run, but even up here, it's got a terrific yield. It's only selling for 18 times next year's earnings estimates. Pretty inexpensive, 33% long-term growth rate. Let's take a closer look with Richard Shearer, the CEO of Emerge Energy Services, to learn more about his company and its prospects. Mr. Shearer, welcome to Mad Money.
Hello, Jim. It's good to be with you, and thanks so much for highlighting Emerge Energy Services today.
Well, of course. The thing that I think the first thing that people are going to say, sir, is, wait a second, sand? Sand is everywhere. How can a company make money off of sand?
I know. We get that question a lot, Jim, and I'll tell you, it's not just any kind of sand. This is a very special type of sand that has to have API specs, and it has to be able to hold up under very high pressure. It's got to be round, spherical in nature. It's got to have a very high crush and be able to withstand all of the new technologies involved, as you described, in hydraulic fracturing and horizontal drilling. So it's very unique in the nature of the sand, and it's very critical for any companies to be successful in this business, because you're only as good as the quality of frac sand you have in the ground.
Now, one of the things I thought was interesting in all your presentations, you make the point that not only is there a certain kind of sand, but that the other guys have a hard time getting it, meaning that the competition is severely limited. Even the permitting process has gotten difficult away from you. Why is it so difficult to get in the sand business?
Well, the barriers to entry are certainly going up. We've seen that, and so has everybody else in the industry. There are deposits nationally, actually, where run-of-mine sand can vary, and the size of the sand is also very important to successful fracturing. The best, coarsest frac sand is to the north, predominantly in Wisconsin and Minnesota, and as a result, that's where we have focused our reserves, so we could have not only high-quality API frac sand, but also the coarsest product mix. The coarsest mix is important because you need that particular type of material, like a 2040 frac sand, for oil drilling and for wet gas. And frankly, since we've started the business, we have basically been sold out of our coarse product mix. So we think that's a competitive advantage for Emerge Energy to be able to offer such a high quality coarse product mix of our northern white sand.
Yep, absolutely. Again, reading through the presentations, it talks about actually directly on the conference call. The biggest problem is too much demand. Sir, your structure, a master limited partnership, you're a growth company. Why is an MLP a good structure for you?
Well, we think an MLP makes a lot of sense because it certainly works very well for our investors. You know, we don't have an IDR in our MLP structure, so everybody shares equally in the rewards and the success that we have. And there's been a lot to share, as you noted, in the past year since we launched. It will allow us then to have a lower cost of equity. We don't have any any issue at all as far as looking for additional opportunity, both organic and through acquisition in this particular market. So this structure serves us very well as a result of that.
All right, well, one last question. I'm sure some insiders, some people are going to say to me, there's been a lot of insider selling. Why should I take the other side of that? The stock has been a magnificent performer, but I know that if I don't raise that concern, people will say that why did I pass on that particular issue?
Yes, we did have a secondary offering, as you've just noted, and we didn't do that to raise capital. In fact, we just announced that we have a cash revolver, a new one of $350 million with a $100 million accordion. And we really did the secondary offering because a number of our unit holders, including our private equity firm, our owners, Insight Equity, an outstanding organization, had legacy investors who have put money into their fund for years, and we felt it was time to start sharing some of the rewards with them. But the company is very sound fundamentally going forward. We see a lot of potential upside, and we're still very bullish.
Right. Are you concerned at all, like today, New York towns can ban fracking, a state court said. Are you concerned at all about some sort of backlash, whether because people worry about earthquakes, people worry about fracking, people get things on a ballot saying that maybe fracking should be banned? How much of a concern should this be for investors?
You know, I don't think it's that big a concern. We take those issues seriously, for sure. But I think if we can separate, Jim, the emotion from the fact of what's going on with the different issues that have been brought up about fracking and about mining frac sand, I think that the science is there to prove that drilling as well as the mining of frac sand even can be done in a very safe and responsible way. With all these issues on the table, the technology has evolved, and it's evolved for the better. So these are all very positive things moving forward that are good for people who are concerned about the impact of mining frac sand as well as drilling. And I think, frankly, we're proving for those who will listen to the facts that, again, moving forward, this whole process can be done very responsibly, and of course it's a very, very positive thing for our nation and for the energy industry as a whole.
Well, sir, you've made a huge amount of money for your unit holders. I want to thank you so much for coming on to Mad Money. Right, that's Rick Shearer, CEO of Emerge Energy Services. Good yield, good growth. That's what you should be looking for. Stay with Cramer.